Welcome to Coast Vue, the show that celebrates the men and women who are making coastal Mississippi such an amazing place to live, work, and play. Today, we're going to talk about an issue, and we're going to get right into it because time is precious for today's show. So let me tell you what today's show is about. We're going to show a quick video that's going to do fine for the radio audience. Then we're going to come back on the other side and visit with Clayton Legear, who's the president and CEO of Merchants and Marine Bank. But here's the deal. The Jackson County Economic Development Foundation, in partnership with both the city of Pascagoula and the Merchants and Marine Bank, have launched a new initiative that they announced on this past Tuesday called SOS Pascagoula. This issue, incidentally, that they're focused on involves all coastal communities, but it is especially significant in Pascagoula, and we'll explain why that is here in just a second. But essentially, it's to bring awareness to some post-Katrina federal regulations that are literally crippling Pascagoula in the housing arena, and it's very, very significant. So why don't we do this? We're going to watch this video, and then we'll come back on the other side, and we're going to visit with Clayton for the rest of this segment and then the next segment as well. So let's watch the video.
Pascagoula sits on the Mississippi Gulf Coast in Jackson County. It's a diverse blue-collar town made up of hard-working, resilient people. Jackson County is an economic engine for Mississippi. 14,000 workers in the defense sector alone. Chevron's largest refinery in the United States. In just the last 24 months, 5,000 jobs and $600 million in new capital investment were announced.
The shipbuilders in the Mississippi Gulf Coast and the surrounding areas, this is a Silicon Valley of shipbuilding.
There are very few true manufacturers left in the United States, and this is one of those places.
Prior to Katrina, Pascagoula enjoyed thriving, affordable neighborhoods, strong schools, and deep family roots. On August 29, 2005, Hurricane Katrina, the worst natural disaster in the United States at the time, came ashore.
It looked like a war zone. You know, when you come home, your house is barely standing and you have nothing left, and you just stand there and think, what am I going to do?
Following the destruction, the federal government came to assist the recovery. However, something went wrong.
The FEMA rules and regulations just went crazy.
Before Katrina, 15 to 20% of Pascagoula was in the flood zone.
One thing we were always told was that, Katrina's not going to affect your new flood zones. That's not going to happen. Well, guess what? It's exactly what happened. There was water in 90% of the town, so now 90% of the city of Pascagoula is in the special flood hazard area.
These are neighborhoods that have only flooded one time in the last 100 years.
We're not talking about vacation homes. We're talking about places for our workers to live, to support the industries that are so vital to Pascagoula, the state of Mississippi, and to the United States.
As a result, thousands of workers leave Pascagoula every day because they don't have another option.
So I'll give you an example. If a property was worth $50,000, you could only use $25,000 to do renovations on it. Well, if that property needs a new roof, if it needs electrical, if it needs flooring, bathrooms, it's already out of the picture. Just the roof alone is going to cost you $7,000, $8,000.
In particular, the substantial improvement rule has really handcuffed a lot of our area residents and prevented them from making routine maintenance that anyone in any other part of the country would be able to do without question.
So we started looking at some numbers, and we put it on a map, and we really weren't expecting the outcome, but 90% of the parcels in the city of Pascagoula had declined in value over the past 10 years. And what was the past 10 years from 2018? 2008, when we got the new maps. And so that just really was a warning for us, or a wake-up call to us, hey, we've got to do something.
You can drive around Pascagoula and see what the effects of this 50% rule is doing to certain communities here in Pascagoula. Communities that were once thriving.
It's a progressive thing, year after year after year of nothing being able to be done in those houses causes the properties to be abandoned, dilapidated, and condemned by the city.
More than likely, we're going to condemn at least 2 to 3 a week. This house here, fixed, this should be closer to $100,000. You know, I think $29,000 is what they assess it at. You know, it's bad.
Even driving up and down Chico Street, you know, just go all the way down and look how many businesses are not even open. It's just vacant buildings, you know, so I think it just kind of makes us look like a ghost town.
50% rule is just making people homeless. That's all there is to it. It's you're throwing people out of their homes, and it's not right.
FEMA's substantial improvement rule is a significant problem. It doesn't allow property owners to spend more than 50% of their property value on maintenance and repairs over a 10-year period. What do you tell a homeowner who's just spent this arbitrary limit fixing their house and a tree falls on it the next week?
People should be able to choose where they want to live, and if you want to live close to where you work, you should have that option. And right now, the federal government has created an environment where we do not have that option in Pascagoula.
For my employees, for instance, my linemen, they have to live within 30 minutes of the service center. However, the housing market just doesn't allow employees to live here in the city.
Everybody from here is very proud of being from Pascagoula, and I think it's just the fact of what we do here as far as the industry and everything we bring to the United States of America right here in this small town of a little bit over 20,000 people is really amazing. But Pascagoula could be so much more if they will give us the opportunity to fix our buildings and renovate our properties and let us shine just like the other cities are doing.
And in Pascagoula, where we have one of the most industrialized areas in the Southeast, where we have jobs, where we have tremendous opportunities for people to come in and build a wonderful life, we're having to turn people away simply because they can't come in and renovate properties to live in.
You know, we would just simply ask for a little more flexibility, a little more freedom.
We're really not looking for a handout here in Pascagoula. What we need is for our friends in Congress and the federal government to understand the problem that we have and to step up and give us the opportunity for our homeowners and the hardworking people here in Pascagoula to be able to repair their homes.
We have things here in Pascagoula, we have employers in Pascagoula that protect the world. They protect the world. And we don't have housing for these people who protect our world and our country to live. It's ridiculous.
It's unfair to these people. It's not right. And that's what we're asking for, fairness.
Wow, that is a very powerful video that speaks really well to this challenge that Pascagoula is having, and really every coastal community is having. But because of the numbers in Pascagoula, they have gotten organized around it, and they've got to find a solution. Failure is not an option, that is for sure. So let me bring in Clayton Legear, who's the president and CEO of Merchants and Marine Bank. And first of all, just say welcome to Coast Vue, my friend. How are you?
Hey, Ricky, thank you so much for having me. It's a pleasure to be on, and thanks for the great work that you and your team do.
Thank you. Thank you very much. I look forward to having a whole show focused on you. This video is extraordinarily well done, and I think it speaks very significantly. It's amazing to me, actually, that you have Ingalls and Chevron and all these supporting industries in Pascagoula, and you have FEMA that's basically making it so that the majority of the people who work in these industries can't live in Pascagoula. That's amazing to me, and we've got to fix that, don't we?
We really do, Ricky, and I think we all know in South Mississippi, we're not afraid of adversity. We're not afraid of hard times. We deal with that every year with the threat of hurricanes and inclement weather, and so we're just accustomed to putting our head down and getting the job done, and I think that's what's happened in Pascagoula since Katrina, since the revision of these maps, and since the 50% rule really began putting a stranglehold. But we're at a point that we simply can't keep our heads down any longer. We have to raise up, and we have to say this is an issue that's impacting Pascagoula and Jackson County in a major way, and it's starting here, but it is going to impact other communities around the country, and enough's enough. And so we're doing something that we don't commonly do as Mississippians, and we're raising our hands saying, hey, we need some help, because this misguided federal policy is strangling one of the areas and one of the region's biggest industrial strongholds.
Well, you've assembled a dream team of community leaders to be focused on it, and I've said many times about the Jackson County Economic Development Foundation, who is this kind of quasi public-private partnership that is really a best practice in a lot of ways, because anything economic development wise passes through this foundation. And it is accomplishing what we needed. And one of the most important things it's doing is getting important elected officials involved in the effort. They have a seat at the table. It gets industry heads a seat at the table. It has, when you think about the team that you have there leading on a daily basis, one of the best in the state of Mississippi. They're hitting on a lot of cylinders. So you need to have an effort like you've assembled around this Pascagoula SOS effort, because otherwise you're not going to get the attention. When you think about the new risk rating 2.0 flood insurance program that's being initiated, I've screamed about it. Every state's screaming about it, and very, very little, if anything, has been done about it yet. So when you're dealing with FEMA, you got to be loud and proud and consistent, and we're going to help you try to do that on this show. When we come back, we'll continue our conversation about this Pascagoula SOS effort with Clayton Legear from Murchison Marine Bank. See you after this break. Welcome back to Coast Vue. I have Clayton Legear with me. He's the president and CEO of Murchison Marine Bank. And a new friend. I'm looking forward to getting to know him better. We have really valuable conversations during the breaks. That's always the case. Sometimes I think we should just, record the breaks, because a lot of good things happen during those conversations. But anyway, we're going to slow it down now. We did a lot in that first half by sort of kicking off why you announced last Tuesday this Pascagoula SOS effort. We showed the video, which I think is extraordinarily well done, and so many voices in this conversation. It needs to be. But I think it is crazy if you think about one of those last comments that were made, that here we are, with industries like Ingalls, for example, that is literally protecting the world. we have workers who are involved in a company in an effort to protect the world, and we cannot house all of them because of some we were punished because of the unnatural flood program that came out of Hurricane Katrina. Our data point, because of Hurricane Katrina, was super high, a once in 100-year situation, like Haley Barber pointed out in the video, and now we're suffering the consequences of that. And if we don't find a way to adjust that, it doesn't bode well for our ability to move forward. And we're going to continue to see blighted properties, not only in Pascagoula, but all over the coast. It is a huge issue, isn't it?
Ricky, it really is a huge issue, and it's one of those that I don't think people often appreciate. It's easy to think that we're talking about high-end mansions that are beachfront. We're talking about these ultra-rich people who are wanting a tax break or a break on their flood insurance, and that's not the case at all. We're talking about homes that are $100,000 homes, $120,000 homes that simply can't be restored beyond 50% of their cumulative value. So if you have termites, or if you need a new electrical system or plumbing or HVAC or any combination of those items, and you hit your 50% threshold, guess what? You're done. And we're talking about real men and women. To your point, we are the most industrialized county in the state, one of the most industrialized in the region, and we can't house our workers. We desperately need workers, not only to protect our freedom at Ingalls by manufacturing the amazing ships they do, but to also fuel our country. Let's not forget that we have Chevron's largest domestic refinery in Pascagoula, or the great work that VT Halter's doing, making things like polar ice cutters. I mean, those are made in Mississippi, and those are all things to be proud of, but something that is not to be proud of is this misguided federal regulation that's strangling out the housing market in Pascagoula.
So people who have been a regular listener here, they've heard me talk about the grandfather clause as it relates to another 50% rule. So I want to differentiate between the two, just so that people can understand we're using 50% in slightly different perspectives here. So the first one was this: if someone had less than 50% damage on their home after Hurricane Katrina, FEMA said, we'll let you rebuild, and you will not have to raise your house. And as a result, you will be grandfathered into the flood insurance program. Now, with the most recent risk rating 2.0 program that they put out, they've done away with grandfathering, and now all homes will now that they're working to be actuarially sound, all homes will have to feel the full brunt of whatever their assessment of that home is in terms of coverage. And that means people are going to be hit left and right with insurance bills they've never seen before. It's a slow ball. It's 18% a year, and they will not let you know what your target rate is. That's 150% rule, and that's important because with this new approach that FEMA's putting out there, they're doing away with the grandfather clause, and that's going to impact a lot of people in a very significant way. Okay, now there's another 50% rule, which is even crazier.
Yes.
So talk specifically about that, because I'm amazed, especially when you think about inflationary times and the cost of building and all the things that are happening. This is really important, and it's crazy when you think about it.
It really is, Ricky. So the rule we're talking about, when we say 50% in this context, we're talking about the substantial improvement rule, which basically states that if your property is in a flood zone, you cannot complete repairs or rehabilitations or improvements to that property that exceed 50% of the property's value in a rolling 10-year period. So again, we're not talking about multi-million-dollar homes here in Pascagoula. We're talking about homes that may be valued $100,000 and that may need new roofing or that may have termite issues, because not of anything the property owners have done, but for most of them, termites, right? I mean, they fly around, guys. We deal with that on the coast. But similarly, who may want to do energy efficient upgrades or make improvements, they can't do that by going beyond the 50% threshold, because if they do, they have to elevate the home. And again, you're thinking about elevating a $100,000 home 8 to 9 foot in the air, guys. There's no way. It's not economically feasible. So you may go to another alternative and say, well, what if somebody just decided not to get flood insurance? That's a logical question. We'll gamble, we'll throw the dice and maybe not get flood insurance. What many people may not realize is that there are federal rules in place that require banks to force flood insurance on borrowers. So for instance, if you have a loan at a bank of any type, or if you have a loan that's a secondary market mortgage with an investor group, by law, you have to have flood insurance if you're in a flood zone. So in essence, you are trapped. You can only get those loans if you can get flood insurance. The only way to get flood insurance is to elevate the property so it's not economically feasible. And it's fascinating and very sad to look at the data coming out of Pascagoula, where since Katrina, 90% of the properties in Pascagoula have declined in value. 90% of the properties today in 2022, in one of the hottest real estate markets that we have ever seen, 90% of the value of properties, 90% of properties in Pascagoula are worth less today than they were in 2005. And that is crazy, guys. That there is nowhere else that I'm aware of in the country where that's the case. And we think it has roots in this misguided substantial improvement rule.
Well, it's interesting. So these are essentially the same 50% rule affecting us in two different ways. One, affecting people's ability to rebuild after the storm. And I think that most people did not realize, certainly if you're impacted by it, you know that it is something that perpetuates. But the reality that it continues to be an issue going forward, if you just want to improve, let's say your family's getting bigger and you want to add on to your house, or maybe as was pointed out in the video, a tree goes through your house and now you're faced with having to fix it, and the high cost of fixing it maybe exceeds what the overall value, or at least 50% of the value of your house. I don't think anyone ever realized that this rule would stop you from adding value to a community. It's incredible that that's what it has become, isn't it, Clayton?
It really is. And I think that's the saddest part of this, Ricky, to your point. Not only has it stopped us from adding value to the community, we see those examples in places like Laurel, Mississippi, or Wetumpka, Alabama. We are now a country that loves finding fixer-uppers. We have TV shows. We have whole channels that are designed around finding that home that has good bones, and let's bring it back to life. Let's rebuild it. And you can do that anywhere else except in Pascagoula, because those homes that have good bones, that are good values, that people could turn into their dream home, are impossible to do so because of the substantial improvement rule. And again, I'll bring out the point that building costs are near all-time highs. We know that property values in every other part of the country are at all-time highs. In Pascagoula, you have a confluence of two very negative factors. One, you have an increased cost of doing any improvement or repair because of what's going on with inflation. Simultaneously, you have a reduction in the value of properties around, so you're getting hit from both sides. Your property is worth less, you can't do the repairs, you can't do the additions, you can't make it yours forever, and it's a double whammy. And let's not forget that many of these homes are family homes. We talk about generational wealth, and we talk about the wealth creating aspect of real estate and how I can purchase property and I can pass it on to my heirs, and we continue building wealth in communities that need it. And let's remember, Pascagoula is a majority minority city. We have one of the largest Latino populations on the coast, and we're proud of that. That diversity makes us strong. So again, these are not people that are living in multi-million-dollar homes down by the beach. These are working class people, or worse yet, these are retirees that have spent their whole life hoping and dreaming of having a paid off home, and now they can't do anything with it because of a misguided federal regulation. Guys, that's what we're dealing with.
And why Pascagoula more than others? And here's just in a short, and you can add whatever you want to add to this, but in places like Waveland and Bay St. Louis and Long Beach and Pass Christian and some areas of Biloxi and Gulfport, we're talking about the storm surge came in and literally wiped homes off the face of the earth. They didn't face, in most cases, the 50% rule, unless they lived on a bayou like my mother did in Gulfport, and that's where it's going to affect some of these other communities in a big way. It already is. But in Pascagoula, you had along the beachfront, you had the homes wiped away. But what happened is the storm surge went far into the city. I mean, deeply into the city. So lots of homes flooded that were not wiped out. There was just a lot of water damage across the city, like most of the city, for a matter of fact. And so you had a lot of homes that were rebuilt. You got a lot of homes in Pascagoula that did not meet the initial 50% rule. In other words, more than 50% damage, so they rebuilt, meaning they did not have to raise their homes to the higher requirements created by adding Katrina, the data point, in the flood mapping process. And here we are now. So owners, business owners, and residents alike wanting to make improvements to their property, and they can't. And so buildings sit vacant. Hey, Clayton, we're unfortunately at the end of this segment, but here's what we're going to do. We have planted the seed. We have explained what this effort is all about. I congratulate you guys on getting so darn organized around it. This show will be on social media and podcast platform, and it will spread. And then we will do another show in the near future and continue the conversation.
That's great, Ricky. Thank you so much. Pleasure to be on.
It is absolutely a pleasure, Clayton. We'll see you soon. Have a great weekend.